Welcome back, Diamond Dave Mclaughlin, with another episode where I'm bringing you real facts. Today we're talking about the best loan options for you. We're going to roll up the sleeves a little bit, and it's going to be a little bit longer, and we're going to get right into it. So if you're like most consumers, you're probably confused. There's a lot of jargon out there. So we're going to talk about conventional loans, FHA loans, USDA loans, and VA loans. Those are most of the common loans. And then we're also going to talk about some non-conventional stuff, bank statement loans, and debt service coverage ratio loans. But we're going to get right into it and start with the most common loan, which is conventional. And we're going to start out by just dispelling the myth. You do not need 20% for a down payment. We have loans with a 1% down, 3% down, 5% down. You can put as much down as you want. Conventional loans are usually for people with great to good credit and good income. So those are conventional loans. If you are a first-time home buyer, we are usually looking for FHA, Federal Housing Administration. Those are government-backed loans, and those are 3.5% down. If you have minimal or marginal credit, maybe a 600, 610 credit score, 680s, FHA would be a good loan for you. Also, debt to income ratio, affordability is stretched. Prices are a little bit higher. So what we usually do with the FHA is we can go a little bit higher in purchase price. So the FHA loan is a great one. And then if you're a veteran, we're in November 2023, and Veterans Day is coming. So all you veterans, this is for you. You fought hard for the country, and they created a loan just for you. And the VA loan is zero down, no mortgage insurance, and you can go as high as you want on that VA loan. And if you're a veteran, and you know other veterans, you can like or comment below, share this video. We love helping our veterans. And then USDA is a rural loan, United States Department of Agriculture, and that's USDA, and that's also zero down. There is mortgage insurance with the USDA, just like a FHA loan, there's mortgage insurance, but USDA is zero down. So if you're limited with down payment, there's USDA. That's a great program. And then we also, at Fairway Independent Mortgage, David Mclaughlin, what we have for you is down payment assistance. Right now in the state of Florida, there's the Hometown Heroes, and we can use any one of those loans, conventional, FHA, we can piggyback that. We can get you up to $35,000 in down payment assistance. So that's a great thing. Again, we're just touching on the top layers of the cake here. We're kind of giving you an overall view of the common loans that most people use, and we're covering the most common ones. And comment below if you have any questions. I'll be happy to get back to you. And then non-traditional, maybe you're an entrepreneur, maybe you own a business and you have a creative accountant. Maybe you don't show enough money. You've been turned down by your bank. Well, a bank statement loan is just that. We look at the bank statements, 12 months or 24 months, and then we take the income that we see in the bank statement and we average that out, and we come up with an income to get you qualified for a loan. So if you're an entrepreneur, bank statement loans are a big one. And then if you're an investor, if you're a real estate investor, I'm talking to you. Debt service coverage ratio, it's called DSCR. And if you're an investor, you don't show income, but you come across the perfect property, you want to buy that property, but you don't show income, but you want to invest, debt service ratio coverage loan, if it's 1-to-1, in other words, if the rent covers the mortgage, covers the debt service, you qualify for the loan. We even go as low as 75 cents on the dollar, as long as it's 75% of the mortgage payment, principal, interest, taxes, and insurance. You qualify. Usually those loans are 20% down. And the bank statement loan, it's only 10% down to backtrack. So again, we're covering the top layers of the cake. These loans, much more complicated. Make sure you check with a professional. You want to check with your mortgage advisor to figure out which loan, which option is best for you. And for example, you give me a call and you're looking at this property, you want to put 5% down, and you don't have a 720 or more credit score. And if you don't have that, it might be better to go FHA. 5% down FHA is going to give you a better interest rate. It's also going to give you better mortgage insurance. So we're going to look at those two loans side by side, what the FHA loan provides, what the conventional loan decides, and then we're going to look at your goals and objectives and give you the best loan that fits that need. If you're an entrepreneur and you give me a call and you have income, you show the income on the tax returns, but you call me on the bank statement loan, I'm going to look at it. We're going to look at it side by side. Conventional 20% down, since you show income, is going to be better interest rate than a bank statement loan. So this has been a lot of information to unpack, but I hope you like the video. I hope it added value, and I know it's confusing out there, a lot of jargon, but been around 29 years. Like, subscribe the video. There's plenty more videos where this came from. I look forward to seeing you at the next video.